All right, let's talk about Aehr Test Systems, ticker AEHR. The company just had their Q1 earnings call on October 6th, and wow, did it send the stock on a wild ride. We're going to dig in and figure out exactly what went down. So get this. Here you have an AI stock that, on paper, actually beats earnings estimates. You'd expect a pop, right? Instead, the stock gets absolutely hammered, dropping over 26% in a single day. What on earth happened here? Let's unpack this because there's a huge disconnect between the story management is telling and what the market is hearing. So here's how we're going to break it down for you. We'll start with the raw numbers, the earnings snapshot. Then we'll get into the big AI story management is pushing. After that, we'll dive deep into why the market hated it, put it all into context, and then we'll give you our take on what to watch for. Okay, first up, the earnings snapshot. Let's lay out the core numbers, because this is where the plot really starts to thicken. Okay, let's dig in. You see that revenue, $11 million bucks? That's pretty much in line with what Wall Street was looking for. And check out that non-GAAP EPS, a penny a share. That's actually a beat. So, good news, right? Well, not so fast. Look closer. Revenue is actually down 16% from this time last year. And bookings? Just 11.4 million. It's this contrast, the beat on one hand and the weakness on the other. That's the whole puzzle of this quarter. And this chart really tells the tale. See, management kept pointing to this little 1-cent non-GAAP profit. But the market was looking at the real underlying number, a 7-cent per share GAAP loss. That's a huge negative swing from the profit they posted last year. The takeaway? That headline beat was really just masking some genuine weakness underneath. So with these kind of shaky numbers, what does management do? Well, they try to change the subject. The CEO, Gain Erickson, he spent almost the entire call painting this really bullish long-term picture that was all about one thing: artificial intelligence. And this right here, this was the heart of their whole pitch. Erickson kept talking about this leading hyperscaler, one of the giant cloud and data center companies, who isn't just buying more of their test systems, but is actually demanding them faster. Now that is a pretty powerful signal of urgent and growing demand. And their strategy is actually pretty smart. First, they built a strong business in the silicon carbide market, which is critical for electric vehicles. Now, they're using that foundation to pivot into the much, much bigger AI market. And the final piece of the puzzle, their potential crown jewel, is a technology called wafer-level burn-in, or WLBI. Think of it like stress testing an entire wafer of chips at once, before they get cut up and put into packages. For incredibly expensive AI chips, this could be a total game changer. And look, this isn't just talk. They're backing it up. They've got a top-tier AI company paying them to evaluate their wafer-level tech. Their systems are already installed at a major OSAT, one of those outsourced chip assembly companies, which is like having a showroom right in the center of the industry. The CEO even said, point blank, that they're talking to every single one of the AI players. The message is clear. The AI pipeline is real, and it is growing. Okay, so if the AI story is so good, why did the stock get absolutely crushed? This is where we get to the heart of it all. The market just wasn't buying the long-term dream when the short-term reality looked so rough. Yep, negative 26%. That was the only number that mattered the next day. All that optimism from management, all that talk about AI, and Wall Street just gave it a massive thumbs down. The disconnect was just staggering. And you can see the two competing stories right here. Management wanted everyone to focus on the future, the big customer orders, the new tech, the amazing AI pipeline. But investors? They were focused on the here and now, the GAAP loss, the fact that there's still no official financial guidance, gross margins that are falling, and a bookings number that just doesn't scream hypergrowth. Let's break down those concerns that really spooked investors. That GAAP loss was a major red flag. The revenue decline shows things are slowing down. But the real gut punch for a lot of people was the gross margin collapse. I mean, it went from nearly 55% last year all the way down to 37.5%. Management blamed product mix, but the market heard that as a sign of weakening pricing power or rising costs. Now, you can't just look at this quarter in a vacuum. You absolutely have to understand the context. You have to see where the stock was coming from before this report ever came out. And here is that crucial context. In the 3 months leading up to earnings, AEHR stock had skyrocketed 117%. It was completely blowing away the rest of the semiconductor sector. What that means is the AI story was already more than priced in. This stock was priced for absolute perfection. So, when they delivered a quarter with any blemishes at all, the floor just fell out from under it. So, looking ahead, what should you be watching for? Well, the bull case is all about tangible proof. We need to see press releases for big new orders. We need to hear good news about that crucial WLBI evaluation. And bringing back formal financial guidance would restore a ton of confidence. The bear case? It's just more of the same. Booking delays, continued pressure on margins, and just general uncertainty. All right, time to put on our analyst hat. Let's put all the pieces together and give you our official take on Aehr Test Systems. We're rating this stock market perform. The AI story is absolutely compelling, and it could totally transform this company. But the near-term headwinds, the losses, the weak margins, the lack of visibility, you just can't ignore them. We think the stock is probably going to tread water and just move with the broader chip sector, at least until a major new catalyst comes along. So here's our thesis. We're predicting this stock stays choppy for a while. The market is done listening to the story. It wants to see results. We think the current price reflects a lot of that execution risk, while maybe discounting the huge long-term AI potential. So what's a potential idea here? For those who really believe in the tech, you might consider long-dated call options. It's a way to bet on a major WLBI catalyst hitting in the next 6 to 9 months. But, and this is a big but, the risk is huge. If that catalyst never comes, the stock could just keep drifting lower. And that's our breakdown of Aehr's latest quarter. As always, please remember this is not financial advice.